Hello and welcome. Yesterday, both the euro and the pound sterling fell on news about Russia's invasion of Ukraine. A number of risky assets as well as stock indices reacted negatively to this event. Later, traders seized the opportunity to buy the instruments at more attractive prices, although there was no conflict resolution. Russia reportedly gave Kyiv 20 hours to accept its terms or face an all-out assault. Against this background, the European and British currencies collapsed, but then managed to quickly recoup their losses. The greenback failed to gain strong upside momentum despite upbeat data on the US economy released yesterday. Nevertheless, demand for safe haven assets is likely to remain solid. Thus, the current upward correction may end if the Russia-Ukraine conflict intensifies further. Today, traders may take notice of data on Germany's economic growth. Its real gross domestic product is expected to have fallen in the final quarter of 2021. France is set to release statistics on consumer spending for January, GDP for the fourth quarter, and consumer prices for February. Besides, today's macroeconomic calendar includes the Euro Area Consumer Confidence Index. The indicator is anticipated to remain unchanged in February. Furthermore, ECB President Christine Lagarde will speak today. However, this report will hardly have a severe impact on the dynamics of the euro. Probably there will be a slight change in rate after the United States publishes data on personal spending and income. Notably, Fed members said on Tuesday the situation around Ukraine and new economic sanctions imposed against Russia were unlikely to influence the regulator's intention to hike interest rates, at least in March. Thus, the US Federal Reserve is going to stick to its current plan. Therefore, even if US consumer spending increases, it barely affects markets. In addition, today's data on inflation expectations from the University of Michigan is likely to go unnoticed by investors. From a technical point of view, if trading activity at 1.1218 remains subdued, the euro will most likely come under pressure again. In this case, one can count on a correction to 1.1163. A false breakout at this level will create a buy signal and the euro will have a chance of rising above 1.1218. In the event of ease geopolitical tensions, if Russia and Ukraine agree to start negotiations, the volume of long position will increase. If the price consolidates above 1.1218, the way to 1.1259 and 1.1290 will open. Moreover, the euro will probably be able to return to 1.1325, thus short positions at 1.1259 and 1.1290 can be considered only amid a false breakout. If buyers fail to regain control over the 1.1163 mark, long positions will be relevant only after a false breakout at 1.1108 or on a rebound at 1.1070 and 1.1034, with a view to catching an intraday correction of 10-15 pips. Now, let's take a closer look at the British pound. Yesterday, the currency plunged by 270 pips, but then managed to quickly pare its losses. Currently, bulls are trying to take control of 1.3417. If the price stays firm about this mark and tests it from the top down, the pound sterling will be able to recover to 1.3467 and 1.3510, again provided that tensions between Ukraine and Russia ease. Otherwise, if the price returns below 1.3417, the British pound will come under stronger downward pressure. In this case, it will head for the levels of 1.3362 and 1.3316. At the mark of 1.3316, it would be possible to go long on a rebound. Long positions at 1.3362 are recommended only amid a false breakout, as the market reaction to further geopolitical developments is unpredictable. If the price rises, traders may consider long position amid a false breakout at 1.3510 or on a rebound at 1.3542, counting on an intraday correction of 25-30 pips. Good luck.